Success is the sum of small efforts repeated day in and day out. Robert Collier. That is a great quote for what we do here each and every day. We don't overpromise, we over-deliver here. And what are we talking about? We're talking about you spending 10 to 15 minutes each and every day following these charts, studying our simple method. And what is it? It's Heikin Ashi candlesticks, which I think are the most accurate candlesticks to help you see what the words Heikin Ashi mean, the average pace. The average pace of price movement. That's what they help you see. I'm going to put at the end of today's video our Heikin Ashi training. We've got a great one for you. Look at the end of the video over the weekend. Study that so you understand how Heikin Ashi candlesticks are computed, how they're used. They're not your standard open, high, low, close. They're calculated a little differently to give you the average of what is going on. And invariably on a chart like this, which is a chartable chart. Not all charts are chartable. What does that mean? It means that, look at the flow here. Goes from green to red to green to red. And you have time to get in. And even on these shorter ones, you have, this would be a hard one, I do admit. Not all of them work, but okay, 1, 2, 3. That one probably doesn't work. 4, 5, 6, 7. So out of 7 moves, you could capture the move on 6 of them. And if you follow our method of limiting your losses by using this little baby right here under what are called your measurement, forecasting and measurement tools, if you go to the short and long position, throw those in and use our method of using the ATR on the 2-day chart. This is showing you the average true range over a 14 period. That's 28 days. You use that to set your profit and loss bands. Again, another training available at the website for free. And it shows you how to set that. What you do is, if the trade doesn't work, if it's getting a little fishy on you, hopefully you're going to see as the candles change that the trade is coming to an end. And perhaps you have already, again, using your 1 ATR, you cash out half your position in your practice trade when you hit that 1 ATR. Then you let the rest of it ride and you pull it out when the trade starts to die. How hard is that? On a good chart, it's not hard, my friends. You should be excited about this. If you would have jumped in here or here, and you might say, Tom, how do you make money when the charts go down? We got another great training. It's called Inverse Funds, how to make money when markets crash. There's an inverse fund to the S&P 500. It's a single inverse, not one of those crazy ones. It's called SH. And when you go to SH, my friends, there it is right there. Boom. It's the ProShares short. Look at what it's been doing. As the S&P's been going up, it's been going down. Would you be in it now? No. But when the S&P goes down, it goes up. Again, something else for you to practice trade. Again, using your brain to make money no matter which way the market goes. Now, when I say make money, I'm talking about practice trades. We're not a stock calling service. You're not paying us for that. We're not offering that. We're offering training. You can practice trade these things until you figure it out. Now, just because you've been doing well as the market's been going up doesn't mean you're a genius. Anybody could have gotten in starting on that week, March the 20th, beginning then, and done well. Whenever the markets go up, I notice that people who jump in, particularly for a long period of time, they think they're geniuses. No, you could just look and do this. Now, when it gets more complicated, that's where your skill set really gets in. But the getting's been good here for the last many weeks. So let's jump into these charts, talk about what we've seen this week, what we may be seeing next week, because this is called the Weekly Review and Forecast. If you appreciate what we do here, become a Patreon supporter. Help us pay for the cost of putting this channel on. If you get value from this, support us. It's easy to do and it's most appreciated. Let's jump. Okay, the S&P 500 flat for the day. You can see it right here. This is the half-day chart. This is the morning. This is the afternoon. It's 195 minutes. Anybody tells you a 4-hour chart's the half day, they don't know how late the market's open. It opens at 9:30, closes at 4. That's 195 minutes is what a half day is. So that's what we chart there. and not 4 hours. That's why we use 195 minutes. We see not a whole lot going on in the morning, about flat, moving down in the afternoon. Well, I'm sorry, flattening in the afternoon. If you compare those lines, you can see, but again, they're Heikin Ashi candlesticks. That's why I'm looking on the right side of my screen. You don't see to show me that it's flat. So what do we see here on the 2-day chart? This is Thursday and Friday. It finished drawing. We can see that it's topped out about the same area as did the Tuesday, Wednesday chart. This is a 2-day chart, represents 2 days. We look at the weekly chart. That represents 5 days, 2.5 times the size of the 2-day chart and 10 times the size of the half-day chart because it's 5 days. If it's a shortened week, okay, it's only 4 days. But as we look at what's going on here, we can see that our move has continued. We've reached a higher high for the week, a little bit bigger candle. Check out the volume, not super here. It's below the average. That's what this black line is. We keep that on there for a reason. When you see these red lines, it doesn't mean that it's a down week. It means that it opened lower than the prior close. That's all that means for us. We tag it that way. That's the way we've set up the volume. So as we look at this week and where we are, we can see where things peaked on Wednesday and where they've been sliding over since then. Now, that doesn't mean that the market's going down. It just means that it's pulling back some. Still reached a higher high for the week. Now, when will this end? Can't tell you that. We'll see it when we start seeing our weekly trend line breached, first by the half day, then by the 2-day, and when we start to go to a red candle here, then we'll know that we're probably coming to the end of the move. How long will this go up? I don't know. Anybody who tells you they know is, I don't know, crazy? I mean, who's going to know until it starts giving you all the signs? We're not getting those signs just yet. I keep thinking it's long in the tooth. It's well due to be turning over. Thought it might turn over here, but it didn't. It kept going. So that's where we are right now. Don't understand why the market has been going up, 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 up. I don't have to understand. I just have to see it being translated in the charts to act on it. Does that make sense? Everything we talk about ought to make sense to you. If something's not making sense, I'm either not explaining it well or you're not listening well. Now let's go on to the Qs. This is the NASDAQ 100. It also has a simple inverse fund. That is PSQ. What is PSQ? It is the ProShares short. It's a single short. It's been going down for many, many weeks. Why? Because the market has been going up. This is an inverse fund. It does the opposite. Now, there are potential problems with an inverse fund. They're recalculated typically on a daily basis. So that, if you think that through, what it can do as far as movement goes is it does reset. So if the market goes up 2 days and then goes up 2% and then turns over and goes down 2%, that 2% it's going down is calculated on a higher figure than what it started at. So your loss can be more. Think that through. Again, you need to practice it so you understand it and you see how well it works for you in your practice trades. So we do see the Qs pulling back a little more than the S&P. You see 2 days of strong down movement right here. And again, I say strong down movement, not that much, 0.30 for today, but has been pulling back. We have a doji on the 2-day chart, still above that weekly trend line. And again, a little bit bigger candle than the last few weeks. And we again see a higher high has been reached. That's where we are, waiting to see how much longer this move will go. We're happy to have been in it all this time. What about 20-year bonds? Well, this is a sloppy chart, starting to get sloppy. It's been good in the past, okay, but it's getting sloppy as of late. Rolled over, okay, that gives you a problem right there. Then it rolled over some more, not a whole lot. Then slid sideways, popped up for 2 weeks, died on the 3rd week, and then 2 weeks down, and now it's trying to move up again. I don't like when charts get sloppy. They'll be good for a while. Many of them. Look at this down move here. Again, there's an inverse fund in 20-year bonds also. So again, we can capture moves like this when they're nice and clean, capture up moves. But when the charts start not giving us clean and smooth moves, like say the S&P does, and again, charts will get bad at times. When they do, you just hold on, wait for them to reestablish themselves. That's okay. Going to see if bonds are going to start taking off over the course of this next week. Up barely for the day, 0.03%. You can see where it popped up in the morning, and then down some in the afternoon. You can see this spinning top here after 3 two-day candles, so 6 days of up movement, then sort of twiddling around and dropping over. So we'll wait and see how this launches into the next week. Maybe it'll take off nicely. Now gold, we saw gold move down. Gold has, moved up to its most recent high. We can see where it tapped that same spot a couple of times and then rolled over, has now started moving up again. Again, this latest 2-day candle not reaching the high of the prior one. 2 days of down movement. You can see why that occurred. You can see how these shorter charts do add up to the longer charts as you pay attention to them and get used to that kind of movement. But gold, again, in an up move on our weekly chart, weakening on our 2-day chart, and of course down on our half-day chart. So again, we'll continue to monitor gold. Reached a higher high this week, a little bit bigger candle in an up move, but seeing how long that is going to continue for us. Stock market starts to weaken. Gold may take advantage of that. Now, what about Bitcoin? This is a chart I don't like. I've told you guys this for quite a while. I never started off tracking Bitcoin. I started tracking because you guys wanted me to. What did we find for you? We found XBTF. What is it? It is the VanEck Bitcoin strategy. It is tied to Bitcoin. It is not a 24-hour-a-day Bitcoin chart. It's an ETF that is traded like a stock, although it's an exchange-traded fund based on Bitcoin. So it pretty much follows Bitcoin, but in a shorter time period as to the 24-hour-a-day Bitcoin chart. For instance, here's a 24-hour-a-day Bitcoin chart. Looks strikingly similar to the XBTF, but again, not exactly the same. If you follow the smaller charts, you can see that more. But we follow this one. Why? Because let me get to it. This one. Why? Because, again, it's an exchange-traded fund. You don't have to go on one of those crypto exchanges that may or may not go broke in order to buy and sell Bitcoin. You can actually buy and sell the ETF. So it's something for you to practice trade. Now, the reason I don't like this chart is because it's a sloppy chart. It's not like the S&P 500. It is not clean. It doesn't excite me. You can see where, like this last pop-up, well, in that 1 week, it pretty much covered almost everything else that happened over the next 3 weeks and then broke and started to move down. That's not something that is a good thing for you to look at trading. But again, you can sure practice trade this, follow it. Maybe when Bitcoin takes off, we'll get a nice clean chart that will give us the ability to really jump into it when it starts moving up substantially. We'll continue to watch. We'll continue to pay attention, hoping that Bitcoin is going to give us a good chart that we can follow. You guys have asked me to continue to follow it. I'm doing that for you. But right now we see it's broken its trend, and you can see here on the half-day chart all the down movement starting, well, after it topped back on the 13th of July, and then it just sort of broke like a waterfall, which is not what you want to see in a chart where you've got green candles. You could see where they were sort of dying, and then, of course, it pulled right over. So that's where we are with our charts as we end the week and we get ready to go into a new week, hoping that stocks continue to move up, but being leery, hoping that, again, we're going to take a serious move up and we're going to see a nice reset on our 20-year bonds, and that gold is going to continue its up move, maybe hit all the way up to this prior high level around the, I believe that's the 190, 191 mark, maybe up around there. Maybe it'll get up that high and roll back over. Maybe it'll punch through it. We'll see. But that's where we are. Thanks again so much, friends, for being with us. Share what we do here with people who you know who are interested in learning how to chart and trade stocks and ETFs. We are here for you each and every day. I love doing this for you guys. It is a blessing to me. People always say, Thom, why do you spend all this time? Why do you do this? I do this because it helps me. It forces me to get into the market each and every day to follow this. And I learned after teaching law for 18 years, while I still had a full-time practice. I just taught one class a semester once a year. But I loved that because it made me get into the minutia of what it was I was teaching. Same here on stocks, ETFs. It keeps me involved in the market every day, makes me keep my nose to the grindstone. And of course, I benefit probably more than you do. Hopefully not so. Hopefully you are learning quite a bit and using what we talk about each and every day to help you become a market master. That's what it's all about. 10 to 15 minutes, that's all we ask, my friends. If you'll just do it each and every day. The fact is, most people won't because they can't. They can't do anything constantly. And those of us who can persevere, who can dedicate ourselves to it, when I talk to folks that say, Thom, I've been following you for X amount of time. These are the successes I've had. I ask them why. And they said, because I persevered day after day. If you come in once a week, you like to listen to me on the weekends. Hope you like the sound of my voice, because that's about the only benefit you are getting is the enjoyment of hearing me talk. But if you really want to get the benefits of learning how to trade, it's going to be following us, practice trading all you can. And when you get good, doing a little bit of fractional trading, that is maybe $100. You go ahead and you buy a couple of shares of something or a fractional amount of an expensive stock or ETF like the S&P 500. Many brokers allow you to buy fractional shares. Maybe you buy one for $100 and then you track how well you are doing. That really keeps you honest. You can cheat in your paper trading and sort of throw out things that didn't work. Whereas if you're doing a small dollar amount, you really know how successful you were or how unsuccessful. And if you start jumping into real money trades, not knowing what you're doing, the experts in the market, the people who are in the market every day and are acting like professionals will take every penny you have. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.